You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here. It is Friday. It is noon Central. It is 1 p.m. Eastern. Time for a little bit of the old Vol Viewing, a.k.a. the premier program for volatility traders. My name, of course, Mark Longo from the TAG, OptionsInsider.com, as well as from the network upon which so many of you are just sucking dry the bandwidth these days. Hey, don't worry. There's more where that came from. If you like what you hear, throw some stars, a like, a comment, wherever you get the show, whatever platform, whatever it lets you do. It does help new people continue to discover the content. And, of course, for all of you on-demand folks, this will be your final program of the broadcast week. If you want your broadcast week to continue, you want to come back for some options, oddities, fun, and trust me, you do. When you see some of the trades we break down and profile and we get up to for our own fun and amusement and profit, then you got to check it out. Options, Oddities. Only one place to go to get that show as well as all the great Pro Q&As. We had a deep dive into trading psychology this week in our Pro Q&A session. It was awesome. People loved it. Oversubscribed with questions. We have to bring them back to do a round two, because it's just a fascinating topic that we don't have a chance to sink our teeth into very often here on the network. Some of the surprising reasons why you maybe cut your winners too early and let your losers run, all the little psychological nuances that go into those types of decisions. Fascinating stuff. You can hear a clip from it on our socials over there at Options on Twitter and everywhere else. And then, of course, if you want to bite off the whole enchilada, get, of course, your name in the hat to win the October Pro Trading Crate, live access to this, everything else we do. A whole bunch more, 200 plus freaking episodes waiting for you on the old Pro podcast feed. When you hit that button, one place to go, theoptionsinsider.com/pro to learn more and join the fun. Hey, you got a little bit of time before Options Oddities. Click that button. You can join us a little bit later today. Should be a good time as we keep on rolling. See who's joining us for a good time today on the old Volatility Views. And what's that? We put up the old Volatility Views signal, a.k.a. a little bit of the old Sigma action, a little bit of the old risk signal, and who answered none other than the rockingest of lobsters himself. I'm surprised he could see it through the haze and the smoke that lines the dark and stormy shores of Maine, where we are joined once again by the rock lobster, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. I'm surprised the VolView signal could cut through the haze of the shores of Maine, sir.
Well, you know, it does shine very brightly. It's quite a beacon in the netherworld of option volatility financial stuff.
It's all red, kind of intimidating. What do they say in the Batman movie? It's not a call, it's a warning. It's a warning to all who might misuse volatility, right? How about that?
Yeah, exactly. If you heard this show, though, you probably, I would say we give at least one useful tidbit per show.
I think you're underselling us. I'm over at least 3 per show. At least
three tidbits.
At least 3
okay,
tidbits.
3 tidbits. I'll go 3 tidbits. I'll see your 3.
If you're going to join us for an hour, you're going to get at least 3 tidbits. And of course, you see that vol view signal hit the sky. You best not misuse volatility. That's what we're all about here. You can be that guy running out of the dark alley in the mask, all scared. That'll be you from the Batman. As we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is, from about trading and trending and analysis and unusual activity, all sorts of fun perspectives. And, you know, it seemed like coming into the latter portion of the week, we might be looking at a red end to the week. Of course, things were looking turbulent, at least to start the session yesterday. We saw a lot of red earlier in the week. We saw a bit of a midday reprieve and some of that sell-off yesterday. And now we had some interesting numbers, I think, before the open. The kind of thing that shows maybe the labor market's still kind of resilient out there, which is not what the Fed wants to see. And yet the market kind of shrugging it off today. S&P up nearly a full percent as we're kicking off the show here. 0.9%. The Dow up about 0.75%, and the NASDAQ up about 1.25%. That means all of our Vol Friends listeners taking a nice little hiatus out there today. Even though net on the week, they are still up. VIX cash, when we kicked off the show, at a 17 handle, 1760, up 1.6 points from where it was this time last week. Of course, well off the highs we saw earlier in the week. We got up to a 20 handle, so we were threatening the notion. When I saw that earlier this week, I thought, oh, are we going to have a return of our old friend, Mr. Loggins? Most of you love him. If you wrote in to say, why is there Loggins on the show? If you don't like Kenny Loggins, I don't know what I can do to dissuade you. You're just wrong. But yeah, we were dangerously close to the danger zone again, listeners. 20.4 was the intraday high out there on Tuesday. We obviously have receded from that down to about a 1760 right now. So again, net up still almost, not quite 2 points, 1.6 points on the week, but down almost 3 points from that high earlier this week. So again, kind of a glass half full, glass half empty view on vol, depending on where you're coming at it. If you're looking at it bearish, I got a little bit of VIX puts and even some UVXY puts just for fun. We'll talk about those a little bit later. In my back pocket, those are looking a little bit better. So I can't say I'm angry at this move. Not exactly unanticipated. VVIX at a 93, so looking frothy, up 5 points from where we were this time last week, but also retreating. It was triple digits. Earlier this week when we were talking about it on the option block, we got north of the par level. We got up to 106, almost 107 on Tuesday in VVIX as well. So again, net higher on the week, but not anywhere close really to the highs we set earlier in the week. So a lot to unpack. Actually, before we even go any farther, Mr. Meatball talking about some tidbits and some nuggets. Allow this to be tidbit or nugget number 1, listeners. I was looking at some data coming into the start of the show. And, you know, people throw it around all the time, this moniker for the market in October of course, Rocktober. They just had Rocktoberfest here in Chicago last night. A great cause also. You should check it out if you haven't done so, listeners. But they call it Rocktober for a reason, listen. I was looking at some of the numbers out here today about the seasonality. Again, we're always talking about the seasonality of VIX, right? And December, usually pretty quiet. August, the dog days of summer, usually pretty anemic, and yet this year not so much, which is what made that so surprising. It was really very much tossing the seasonality we've come to expect from VIX out the window. Can we do that again? Is October going to be the sleepiest month of the year? Who knows? It passes prologue this year, maybe. But right now, coming into it, they call it Rocktober for a reason, listeners. Hit intramonth highs above 46 times in recent years, 89.5 in 2008, obviously 2008. Bit of a crazy bonkers year. 49.5 in 1998, 48.64 in 1997, 46.88 in 2011, 43.44 in 2002, and 41.16 in 2020. So Quite a few intra-month highs above the 40 handle in October. Also, if you look at going back 30 years now, 30 years worth of VIX data, the highest average highs all came in October of 29. Average lows also the highest in October, 1740. And the average closing value also the highest in October of 21.6. So again, something to bear in mind as we head into quote-unquote Rocktober. Will seasonality rear its ugly head again? It seemed like we were heading that way, right? Earlier this week, October kicks off, and bam, we are off to the races from a vol perspective, hitting a 20 handle, threatening the return of the logins, now retreating off that. Is this just the calm before the storm, listeners? Or is this seasonality, can we just toss it? Because August, the banger month of the year, who knows what the hell's going on anymore? Mr. Rock Lobster, make sense of all this madness, sir. What is going on out there? Is seasonality, do you just throw it out the window now with VIX?
No, I think part of the seasonality is just because summer is generally less volatile, and then all the vols get smoked. I mean, you've heard the jam croissant and Chris Sidile. They talk about the premium sellers get more aggressive, vol gets lower, gamma gets higher. So there's a lot of reasons for the seasonality. And then all of a sudden, vol is at kind of low because people are pounding it and the market's not doing anything. And then everybody's short a lot of stuff at low vol, right? And then, something happens, So, and I think that's a big part of the reason, that you have it. So, and you're picking a couple of times there, like 2011. 2008, we had this little financial crisis thing. 1998, what do we have? The Russian bond collapse. 97. So I think 98 was, 98 was long-term capital. 97 was like it all started with the Russians, I think. I think that those 2 years. Then 2011, we had the Euro crisis. 2002, we had like 9/11, and then basically the end of the dot-com boom. I was probably the dead low of a lot of stocks. And then 2020, we had, funny enough, that wasn't COVID. That was the election because VIX was starting to carry the election, and then everybody thought, there'd be blood in the streets and blah, blah. And that didn't happen until January 6th. So,
yes. We had the blood. It was a delayed blood in the streets on that one.
Thankfully, there was not much blood, and there was a transfer of power. However, I think that is the highest VIX print pre-election we've ever had, by far. I don't think we've ever been over 40 for an election. But we were that time. I don't know. Maybe 2024 will be different. Because I haven't seen the season. Let's see. That'll be next year. It'll be interesting when the November rolls around. Because you remember that huge kink we had that whole year in 2020? Because we were laughing about it in January.
Yeah, we thought it was ridiculous. We thought it was absurd.
Pre-COVID, We're like, why are they bidding this up so high?
And then something else came along to distract us. I can't imagine what it could have been.
Then that peak in vol was then the bottom of vol. So, yes, there was a little distraction there. Dogs and cats were falling from the skies and, blah, blah, blah. But anyway, and now, so, is there something to the seasonality? Sure, because of the forces that kind of make it so. But it hasn't hurt. You can't deny that a lot of these issues sort of happen. Like, okay, it's almost like everybody forgets about the summer. They go on vacation, and they come back, and they go, whoa, we got a problem. Think of the events that, for the fact that we had so many financial events or things just happen around there, it is a little uncanny, I have to say. I guess Rocktober is not a terrible moniker for it, but at least for right now, and right now, what do we have? We have seasonal lows. We can talk about like all these stocks, but we do have SPY traded a low this morning. It only lasted for a couple seconds. I was making fun of Mark because we were in our meeting. I'm like, dude, we're going to be up on the day today. And I know as I was bearish, so you could be like cautiously bearish, right? But so this morning I totally messed with Mark. I'm like, dude, we're going to be up on the day. He's like, no, Andrew. And then we were kind of arguing. I'm like, dude, I'm going to tweet it right now so we can timestamp it. So if you go to my Twitter feed, option vol, and my students that follow me, some of them, they bought some call flies and stuff. But I had to make sure I got out of all my short-term put calendars this morning. And then I rode my SPY calls to the end of the day. So that ended up being a really good day. But I'm like, we can't, the biggest thing is we just don't sell off, okay. And the reality is, okay, the non-farm payroll number was good, so, I mean, we'll get, I guess, that into another segment of the show, but the seasonality thing, well, just think about it now. We're at, lows of the last 3 months. We really couldn't break through that low. And VIX is still elevated. We were trading 13 like 2 weeks ago, right? And now here we are into October, and we traded 20 this week. So, it's still holding fast. And I think for a lot of the reasons that, we described, I think realized vol hit a single digit low. Let me see here. How low did it get just a couple months ago? So if I look at realized vol for the last 3 months, let's see here. Yeah, so yeah, once again, the month of October, 30-day volatility averaged below 10%. So it's almost like clockwork, right? So 30-day vol was less than a single. It was it was in the 9 handle, to be honest. So that starts to pull all the implied vols down because the liquidity providers like, screw it, I'm not buying all this juice if people sell it to me. So vol goes down and down and down. And then we work into September, people get more aggressive, and then we kind of fell off the cliff at 4,500. So there might have been a little mad scramble. And even now, and I think this is what I would say is the biggest symptom of what we have right now. If you had to guess, because all of a sudden we've had all this stuff since, the Moody's downgrade and this and this and this, and, tons of stocks are getting totally shellacked. And then we have these interest rates going sky high. And you would think, as you would say, dogs and cats, are falling out of the sky. How high do you think the 30-day average realized vol for SPX is right now? It's like barely over 12%, 12 and a quarter. So you would think with interest rates at, 20, 25, 20, what is it, 20-year high or something? Basically right before the financial crisis. So clearly the economy can grow with rates at 8%, although back then the government was only they only had 15 trillion in the national debt. Now they have 33. So I think the biggest loser will be Uncle Sam eventually. But we're not generating the close to close vol, with those sustained sell off. We used to every day, screaming that we're down 2, 3, down 1.5, down 2%. We can't maintain those, maintain those days. So it's hard to get too gloom and doomy, although I still have okay, this bond thing is definitely a mess, and it is a drag on equity prices, right? Because the market doesn't like uncertainty. So I still have that, kind of grumpiness about equities. But eventually, right, it is possible that stocks break their connection to interest rates, and the market just decides that rates are not going down anytime soon. So today is only one day, because today we have a pretty solid day where I think the longer bond touched 5% for a while. So TLT is down, so bonds are down and stocks are up. And it's because the employment number just looks a lot better than everybody expected. So I think it's a little bit more old fashioned of the economy's running a little hot. Okay, so people are working, cool. stocks go up because, there's going to be some growth, but bonds go down. I think this is actually, at least this morning, I thought we had kind of the anti-market, which I thought it was all crap anyway. Like, how do you sell off when you have a huge employment number? Like, that was total crap. So you have actually the market starting to function what I would say normally. You got hot labor market. That means rates are not coming down anytime soon. That's got to be bad for bonds, but it's good for stocks. And you have what we're back to sort of what I would call the normal response to economic news. Remember, like for years we had this, like everything was bizarro world.
Yeah, I guess I was going to say, I guess we're in a good news is good news again. I mean, it depends how you interpret good news. I was looking through the numbers while you were talking here. 336,000 non-farm jobs increased versus 170,000. That's a hot number. That's a lot. Even immediately after that, they price up the increase probability on FedWatch to 43%. It jumped up. They also move it closer. And they're pushing back the date of any sort of rate cut to late next year, if at all. So you'd think those things would be bearish for the market, and yet, nope. It's good news is good news again. So we're off. We're off to the races. It's not good news translates into the Fed, which is now bad news. So, yeah, it just depends what mood they're in.
Yeah, I guess so, really. And personally, I would like to see the government, as you well know, get out of the business that they've been in, to take over the size of the economy and all that they've been doing. Because it's, some government's good, that's fine. But, it has been a little ridiculous over the last, I would say, since the great financial crisis. The footprint has become quite large. And I'm not sure we've gotten a huge return on all the money that has been spent. Maybe people could argue that maybe, we have, and they did all the right stuff. But at least right now, good news is good news again. So I think a good employment number is good news, which means rates aren't coming again. It would be hard to trade this and say, wow, rates are coming down next year. It would be hard to make that case right now, I think. And the biggest, I think the bigger response is if we get a really good solid sell-off in VIX today. I would like to see it below the 17 handle into the 16s again, because you want, again, so you're trading in a crowd for listeners, why is VIX staying here at 17.5? Because nobody is selling the liquidity provider any juice yet. So vol goes down when there's confidence, and funds are out there whacking those puts, whacking the 4,000s, the 3,500s, the 3,000s, just trying to annihilate that downside, because it's, a lot of times puts go out worthless. But you need, there has to be some confidence for that. But I would say right now, from a confidence point of view, I think stocks are at highs of the day. So that's, that's a good thing. But there's only so far, VIX can drop when the market decides just to go straight up parabolic. So anyway, that is the news this morning. And I'm, at least for today, hopefully that was a tidbit, at least one or two for the listeners.
I'll say that's multiple nuggets right there. So they're getting their nuggets. They're getting their tidbits already. By the way, speaking of tidbits, I was just looking at this right now with this chart here of, the highs in October over the years. And 48.64 in 1997, October. That's when I first cut my teeth. I was just walking in and getting my ID card printed in October of 97, and the VIX was almost at 50. I don't think I appreciated that when I first walked in. I was like, okay, what is this VIX thing? What are you talking about? Of course, back then, VIX was a different beast. I know, obviously, they've changed the methodology, and they've changed how they go back and calculate it in history as well. So this number reflects the new methodology. But still, just a funny nugget to just walk into this business when VIX is at a 50. That seems insane now. But again, the gifts of long-term capital, sir. They kept on giving. Let's see if those gifts translate into a little bit of action in the futures, listeners. And the answer is kind of. Coming into the start of the show, we had the vol surface, the front portion of the curve, still looking a little bit frothier than it was a week ago. I'm sure if we rack these right now, they might have come in a little bit again. But when we kicked off the show, we had the front portion of the curve, the October future, up not quite a point, about 0.8 points. So giving up a lot of the highs I saw earlier in the week. We were backward. People were chiming in. Oh, backward VIX futures. Here we go. Time to sell all the vol. We heard that once or twice this week. Nov futures up about 0.6 of a point, a little over half of a point. And let's see if we go out now, listeners, into Q1 and Q2 of next year. We start seeing that 20 handle rearing its ugly head again, this time in April 2010. That's where we first see a 20 handle in April of next year. So again, they're still pricing in that little bit of a kink, a little bit of a hiccup earlier next year. Mr. Rock Lobster, anything catching your eye out there in the volatility surface this week? Perhaps another nugget or tidbit to share.
Well, I think this week we had as close to backwardation as we've had in a while in the front end of the curve, for sure. So we had that going. We crossed 20 twice. So my 20 rule held up. Generally, you don't cross 20 once in VIX. You cross it twice. So that's, again, I wonder if there's a Russell, he could do a Russell research on that. But I think that's a pretty, pretty solid observation. Generally hits 20 twice because the stuff that causes the vol. So you had that. We had the front end totally flat. And for a while, I think we had VIX futures were over, VIX cash was over every future, I think except the far back month at some point. I think it was, let's see, today's Friday, Thursday, when it's like Tuesday, and then in the morning, the peak on Wednesday when vol peaked, and when everybody's kind of freaking out, although the market didn't sell off that big. So, I mean, you did have that. And normally when you have that total retreat from like a backwardated VIX, you're starting to look at vol lows again, because now that the event in general has peaked, and if the event has peaked, the vol event anyway, generally vol starts to find its way back to where it was prior to the event. And I think that's kind of what's happening right now. And VIX it's hard to believe, but on September 15th, VIX was 13. So again, you have to see, obviously actual vol of SPX has to stay in the 12s or lower, but it certainly can happen. And then now that we've peaked, everybody got excited. They came in, bid the front end, vol got bid. Everybody was worried that rates would crater stocks. Like now you're here today on Friday and it's not coming to pass. So, you have to think to yourself, okay, well, if it's not happening, this shock in rates, whatever, couldn't crater stocks. We could have any other news. There could be any announcement, anything can happen, obviously. But at least for right now, it's not sending stock prices. It's not sending stock prices lower. So it's going to be harder for VIX to hold on to this level because, what will keep the VIX bid here, except basically worry about what could happen in a week or 2 weeks or whatever. So generally you get a peak from vol and then you start the long walk back down to, it wouldn't surprise me to see like a 15 handle by October expiration, maybe 14. Because generally my rule is once you're in contango, VIX will lose a point a week just through the liquidity providers constantly pushing vol forward. There's always that pressure. So as long as you're in contango, like VIX generally drops like somewhere between a half and 1 point a week. That's usually my back of the envelope estimate until it kind of gets around to wherever the realized vol is trading. So there's some wiggle room in there, but that's the general rule. So like we could lose easily another point next week, right? Again, if we keep with the 12 vol or lower in SPX, like who wants 30-day volatility at 17.5? It'll be 16.5 easy. And then you're just, it's a small move to 15. So anyway, so when vol's not going up, it's generally going down. And that's, we peaked this week. We had a backward market. It was goofy and it stopped. And because stocks stopped going down, that 4,200 is, I guess is that the new, what Tucson was saying this week.
He was calling that support there. Yes, he was.
Yeah, he was definitely saying that. So it was a pretty spot on call. I was talking with my students yesterday about the range in SPX and how the market was pricing volatility. Like the October 13 cycle was, they were pricing the straddle at $10, and I guess we traded close to 4,200 this morning. Doesn't feel like very far away right now, but it was like over 100 points ago. So it was definitely pricing that level. But and then we got the move, on this news. So traders were pricing 4,300 as the edge, basically, of the straddle. And I always look at the straddle as a pretty good indicator where traders think something's going to go, especially if there's a news event. And lately, non-farm payroll numbers, Fed deciding interest rate policy, all that kind of stuff. When the straddle's kind of priced there, we have been going to the edge of the straddle or through time and time again this year, like many more times than you would think. And that's what made my trade in OP mentoring good, because you got there was a little bit of edge to buy some put calendars, and yesterday, like at the show time, I was pulling up some butterfly sheets that we have, and like, you remember the show? I was like, oh man, things just suck. This is like, the sentiment's bad, everything's terrible.
You mean every show? No, but you did just say that. That was on
when we were doing that was
Thursday.
Right?
That was yesterday.
Yeah, yesterday. So I'm like, oh man, things are. And so and then you also, like, when I'm that bearish,
just buy it all,
usually
baby.
have to check myself at the door a little bit. So I started pulling up my sheets, and then so we have these butterfly sheets, and it helps price. So basically, how the sheets were pricing were, because we basically run a strip of all the butterflies. You pick the terms. It's usually like 4 to 6 week. 4 to 8 days. It depends. You could put in any term you want, but what it does is it just prices butterflies all the way up the strip from, let's say, 200 points down SPX to 200 points up SPX. We can even go down to 300 points. So anyway, it's a pretty long range. Let's say 500 points SPX. And then it's just telling you like where there's some edge in the curve, the volatility curve. So you could have knocked me over with a feather yesterday. All of the edge was in the upside, meaning the liquidity provider was charging more for all of the out of the money options just at the money and up. So when you put on a fly, you're getting paid to buy options. You're getting paid to buy options below the money. So essentially, like if you're putting on a fly, you buy the bottom leg down there, and then you sell some upside, and then you bought the way out of the money call up above. So the liquidity provider was pricing that trade relatively high, which means they're trying to charge a lot more for upside calls. So when I look at that, that is a very bullish sentiment indicator. And I put it out in my OP newsletter, and for this morning, so when my students were reading it, like, listen, I can have my opinion, whatever it is, but I'm just telling you, this was bid on the upside. And it made me change the trade setup I had for my mentoring students. I changed the ratio of the downside to the upside, so it would be a little more balanced. And so it basically, I didn't lean as short as I was feeling. It was much closer to a delta neutral lean. So that was my surprise from skew. So another thing I tell my students is skew is change in, well, let's just put it the way. The skew you see right now is pricing the next market move, not the current market move. So and if you're a skew geek, and you're watching this stuff, there is what the current curve is, and then there's the change in how the curve is shaped. So sometimes it flexes more on the downside, depending on what liquidity provider inventory is, and then sometimes it flexes on the upside. And this time it was flexing upside big time. So the adjustment was for an upside surprise. So anyway, so I just traded it that way this morning. We opened down, and it was very hard to get rid of a short delta this morning. It took me like 20 minutes to fill like 10 contracts, because every time I tried, like the bids just went away. So I'm like, okay, we're not going down, because I can't sell these puts for the life of me. And then by closing the downside, that left me with the long call and the rest of the position. And since I own that call for much, much less than I paid for it, I just wrote it. And then I ended up closing them right before showtime. It just took my limit out and I was done. So, but the moral to the story is you can have an opinion, but if you do look at how the curve is priced, since this all started from the VIX curve this week, like there's a lot of information in the vol curve that might be contra to whatever your opinion is. And in the past, I have ignored it at my peril. So at minimum, the other thing it told me is that, wow, we could have a little bit more of an upside move than people expect, because the liquidity providers were pricing that. They're expecting a higher move because they were charging more money for it than they normally would have, which means paper was buying it. That's the short answer. So, paper's not always right, but in this particular case, it literally was textbook on how it works. So
the market's going to give it to you, right? You take it. Why not?
Absolutely. So you just have to trade what you see. So, and that's what I ended up doing. So, I could have screwed myself by being, too short this morning and stayed bearish.
Yeah, you could have held on to that. Yes,
because I have to say, I was pretty grumpy around show. Like, oh, this market sucks. Well, interest rates.
It did look pretty ugly this morning. Yeah, I was kind of with Meatball. I did not think it was going to turn around. In fact, I did track down your tweet. You are correct. You did tweet 4 hours ago. You wrote up in the day. So glad to see you took the time to spell check and check your grammar on this. But couldn't be bothered to do that. But you did tweet it out, so it is on the record. You did say we're going to go up in the day 4 hours ago. So ballyhoo to you, because after I heard that ADP number, I was kind of like the Meatball. I was like, I don't think this is nasty for looking at the Fed impact, and yet the market, nope, right back up. Let's see if volume-wise we were up on the past month. We have the numbers in our hot little hands right now from our friends over there at OCC listeners. We broke down the totals yesterday on the option block, so check that out if you want to hear them. In a nutshell, total volume, no, we were down about 7.5% from September of a year ago. Total volume, 847.6 million contracts. ADV, 44.4 million. But that's not what we're here to talk about. We're here to talk about ye old VIX futures, listeners, because they have been a surprising bright spot this year after kind of languishing throughout most of the pandemic. When everything else was blowing the doors off from a volume perspective in the options business, VIX futures couldn't really catch a bid. People were excited for SVIX and other products coming online. They thought that might maybe gin up some volume. Never really materialized until this year. All of a sudden, we were seeing some decent volume numbers. And then this month came along, and then no bueno out there. VIX futures volume down about almost 5.5% to a little bit below 4.7, right around 4.7 million contracts or so out there. A bright spot, though, if you're looking for some bright spots out there, pretty much the lone bright spot on the entire chart, listeners. You can probably take a guess what it was. Yeah, it was index options. You folks continue to suck down the zero DTE like it's going out of style. Volume for September of 2023, 79.9 million contracts. That's up nearly 10%, about 9.3% from the 73.1 million contracts of this time last year. So again, zero DTE, almost putting the rest of the market on its back now and saying, hey, hold my bear, kid. We're gonna put up some crazy numbers. So again, that's just in the indexes. Wait till we start seeing these things spread out to other products. So crazy town out there on the volume front, even if VIX futures right now languishing a little bit. Let's see if the old VIX mothership is languishing right now. And the answer is no. I mean, we've this kind of reversal intraday. We know that VIX tends to like that. And we're seeing not quite as robust as we saw yesterday, because we started off the day hot yesterday to the dark side. And VIX really likes that. We started off today red too, but I guess 2 days in a row, he didn't get that same shock and awe effect that we got yesterday. Either way, a little over 500,000 contracts on the tape right now, about 515,000. The ADV, though, continuing to look robust. 826,000 contracts. That's the ADV right now. That's up 169,000 contracts from this time a week ago. So, yeah, we're putting up some numbers in VIX land post-Powell. Go figure. All it takes is a little bit of Fed juice, right, to just turn VIX up to 11. In terms of the top positions out there, what's open for size in VIX options right now, listeners? Let's find out together. If you're looking for some puts to make their way onto the radar, you might be a little bit happy this week. We have 3 of them, actually. So that's the most we've seen in quite some time. It is now 7 calls to 3 puts in the top 10. Do with that what you will, listeners. It also cost you 223,000 contracts to break into the top 10, which certainly is not nothing. That's a pretty robust number. That gets you to the OCK25s. Number 9, 226,000 of the DS45. So once again, we get right into some of those more interesting strikes, shall we say. Number 8, our first of 3 puts, 231,000 of the October 16 puts. Number 7, 240,000 of the DS19 calls. Number 6, 246,000 of the NOV 17 puts. Number 5, 271,000 of the NOV 47 half. So 2 ends of the spectrum right there, listeners. Number 4, 289,000 of the OCK20s. Number 3, 306,000 of the DS40s. Number 2, 317,000 of the DS35s. And the number 1 size position in VIX options right now, listeners. If you can do the math, process of elimination, you can figure out, yes, it is a put. 327,000 of the October 15 puts. That's been kind of the strike du jour on the put side for a while. I'm curious, listeners, are you folks in on the 15 puts? Got myself a little bit of the old 17 put action this week. So what put strikes, if you have any, are you playing around with? Are you playing with flies? Are you going straight puts? I'm curious, listeners. Hit us up. Let us know. Let's parse some of the numbers we're seeing for this week. Today, like we said, 515,000 contracts on the tape. The big dog today, nearly 70,000 of the OCK25. So that strike on fire. Looks like people mostly lifting offers on that strike today. So folks, loading up on some OCK25s. Maybe this morning when we were looking a little dire out there, some folks saying, here we go. It's definitely Loggins time. We hit that 25 strike. We are firmly in the danger zone. Not quite there yet. Number 2, 52,000 of the OCK17 puts. Number 3, 45,000 of the OCK16 puts. Number 4, 32,000 of the OCK20s. And rounding out the top 5 on a decently active day, 22,000 of the OCK24s. Going out to yesterday, a little bit more paper on the tape. Finished shy of 1 million, but not that far away. 891,000 contracts. If you remember listening to the option block yesterday, we were off to the races just by showtime. 96,000 was the big dog yesterday. That gets you to the NOV 17 puts. And number 2, 66,000 of the DS19s. Number 3, 64,000 of the DS17 puts. A lot of longer-term plays going up yesterday. Number 4, 58,000 of the DS14 puts, all long-term. And the only near-dated contract, 46,000 of the OCK18 puts coming in at number 5. Let's go out to Wednesday, also a pretty robust day, 710,000 contracts on the tape. The big dog on Wednesday, 63K of the OCK17 puts. I like that strike. Number 2, 53,000 of the OCK18 puts. Number 3, 48,000 of the OCK15 puts. You got quite the put strip going up here. Number 4, 32,000 of the D16 puts. And rounding out the top 5, 30,000 of the NOV 17 puts. All puts all the time on Wednesday, listeners. Tuesday, the banger day of the week, 1.28 million contracts on the tape. That's nothing to sneeze at, listeners. The big dog, 98, almost 99,000 of the October 17 puts, followed by number 2, 69,000 of the OCK15 puts. Number 3, 69,000 as well of the OCK16 puts, so maybe some vertical or rolling action there. Number 4, 55,000 of the OCK25s. And rounding out the top 5 on a banger Tuesday, 48,000 of the OCK20s. And then coming in on Monday, the light day of the week, at least so far, we seem like we're going to surpass it today. 553,000 contracts on the tape on Monday. 36,000 was the big dog. That gets you to the NOV 18 puts, followed by number 2, 36,000 as well, the OCK 15 puts. So Bit of a funky roll, if that is a roll, maybe more of a diagonal. Number 3, 33,000 of the OCK18s. Number 4, 27,000 of the OCK20s. And rounding out the top 5, 27,000 as well of the OCK22s. Mr. Rock Lobster, a decently robust week out there on the VIX front. One day north of 1 million, multiple days threatening it. The ADV back up to an impressive 826,000. Anything catching your eye in the land of the big VIX mothership this week, sir?
I think the biggest thing was how fast they crushed the vol like the day before yesterday. On Wednesday, just like VVIX just tanked that day. So it was that, again, that was just trading it. And I'm like, oh my gosh, like how hard that vol crash came down. So I think just from a trade point of view, I was surprised by how sharp, and that was, I think, the first precursor to what was going on this week, that like the bid for VIX upside just went away on Wednesday, like surprisingly fast. And as far as contracts goes, I saw some put activity in VIX puts for October, like the 17 puts, I think, got as low as like 42 cents, which like that felt low to me. Like you could buy yesterday,
I had the same
when they
thought.
were kind of crushing, I felt like they were crushing the ball. You could buy VIX puts for nothing.
Yeah, they were surprisingly cheap.
October
I thought the same
VIX puts
thing
for nothing. So it's surprising how low they got. It's like, and I'm like, I was kind of sweating because I own some, and and like you could have bought 100, 200,000 VIX puts. I don't think the vol would have budged a tick yesterday. So I thought that was, again, just from a trading point of view, I thought that was the most interesting thing. But yeah, I mean, they were coming for calls, but all I can say is, at least for the October cycle, VIX calls looks like they're dying a terrible death right now.
They are certainly dying today. You had your moment earlier in the session. Listen, how many times have we said that? Get your VIX upside, get out while the getting's good, because the moments are few and far between. Let's go out and see if we have some moments in the rest of the vol ecosystem this week. Listen, let's start in SVIX. It was giving up the ghost earlier this week. We got it down to a 25 handle. Let's see, how low did it get intra-week? 24.95, so it actually broke the 25 handle again on Tuesday. Now back up to about a 27.60. It's still down on the week, down about 1.4 points from where it was this time last week. Volume-wise, starting to catch a little bit of a bid. 2,600 contracts going up today. The ADV is up 2,000 from this time last week, so that's nearly doubled. It's 4,500 now. It was 2,500 this time a week ago, so that's nothing to sneeze at. And, nearly doubling the ADV in the span of a week. They could keep that up. We might actually have a product to sink our teeth into. The top position out there right now, nearly 11,000 of the OCK20 puts. UVIX, I think I misspoke earlier. I think I said I had some UVXY puts. I actually put on some UVIX puts, which I have not done because this thing's been a piece of garbage and it's been under the 10 handle forever. But they announced that reverse split, so I was playing around a little bit of the weekly puts, picked up some 3.5 puts in UVIX, expiring in the weeklies. I don't want to hold them through this nonsense reverse split we have coming up. But I thought it'd be a fun thing to talk about on the show, and indeed on oddities coming up a little bit later. And looking pretty good right now. 340 out there in UVIX. It's still up on the week, but only up about 0.15. Volume-wise, 13,000, so the ADV is 14,000. That's up 4,000, so it seems like just the news of this reverse split on top of it getting a little bit juicier out there. Those two things have combined for a little bit of action out there in UVIX. The big dog in UVIX right now, 11,000 of the OCK 3 calls, and these expire next Friday. So interesting choice out there. UVXY 16 even. Right now, up about 1/4 point from last week. Today, 141,000 contracts. That's pretty good, especially when you consider the ADV is 128,000, and that's moving up 17,000. So go figure. UVXY gets a little bit more meat on the bone. People actually want to trade the options again. The big position out there, almost 31,000 of the pre-split adjusted Jan doubles. So again, it's mostly noise. The only top 5 position that isn't pre-split adjusted are 10,000 of the OCK 16 puts expiring today. So Going right up to the wire with these yet again, these heartbreaker products, listeners. And VXX 2330 right now, up about half a point on the week. The ADV is 102,000, up about 20,000 on the week. So again, it's a robust week across the board for all the vol products. Today, 88,000, so it seems like they're probably going to hit it. And the big dog position in VXX right now, listeners, 35,000 of the OCK 25 calls. Wow, a lot to unpack there. We kind of did a quick roundup there of the entire vol ETP ecosystem, Mr. Rock Lobster. That said, if anything catches your eye or anything stands out, maybe any nuggets or tidbits you'd like to share on any of these products for our listeners, have at it, sir.
Well, number one, I'm doing a UVIX webinar on the 11th because it's gonna have a 10-for-1 split.
What good timing, sir.
Well, I'm starting to learn this game of the marketing hat after being around the master marketer as yourself for so many years. Like, oh, this crypto thing looks interesting. I think I'll launch a show. And then you get like 500 million subscribers to the crypto show. So I thought, so hey, might as well be timely, right? So yeah, we will be talking about you. And, those products are starting to gain more traction. The liquidity is getting better. Actually, Mark just put on an SVIX buy right today. And, kind of trading the vol dropping into the end of the year. So it's like the pricing, the vol's a little juicier there. Like the pricing on that stuff looks kind of good. So I would say, yeah, they're getting there's a little more volume there and a little bit more interesting pricing on all that stuff. So this is kind of also one of the odd areas where, it like shorter term, like the vol crush sort of messes up the delta a little bit. If you're trying to short them by buying puts, if you're selling calls, they're probably doing better. So yeah, you're getting a little vol crush here right now in those products. So I would just tell people to just watch out. You get a little bit of vol smoke, but the thing is, you could, I look like for right now, like something like for VXX, I bought some December ordinary 19 puts this morning. I have a little position on in it, but like we were just 20 VXX only a week or two ago. So I use kind of like where the vol product was last to sort of strike the puts that I want to buy. If we meander down to that, but the fact that you get, 19 level puts in VXX and we were just trading 20, they were only 55 cents this morning or 52 cents or even less. I think they traded below 50. So like, you got to look for your, and even in this morning, the curve you had a contango curve with the market down. It's like, sometimes you do have a couple opportunities, but you kind of have to be waiting for it, if you know what I mean.
Hopefully you're waiting for the crystal ball, listeners, in which case your dreams are about to come true.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Yeah, we're already coming up against it, listeners. It's been a action-packed show. I personally have to say we jammed in. I'm going to go at least 10 tidbits or nuggets on this show, if not more. So we blew away the over-under on the 3 juicy vol tidbits for you out there, listeners. Really quickly, earlier in the week when we were back above 20 in the danger zone on Tuesday, we put out a little flash poll, just a brief, quick thing to our audience. We said, hey, we're back above 20, but for how long? Quite simply, will we close above 20 on Friday? And you folks faded it, even though it was close. At the end of the day, 56% of you chose heck no, and 44% chose heck yes. So that's about as close to split as our audience tends to get. So interesting stuff, but at the end of the day, you did fade it, and that, at least so far, was the right call, barring some crazy aberration towards the second half of the session. Let's see. Speaking of the rest of the session, let's see what we got cooking right out there right now on the vol front. Oh, my goodness, 1744 in VIX. I was at a 17. Is this right? No, this is. Do we not have the vol prognostications from last week? Did we not copy them over? Producer extraordinaire, you got to find me some of our vol predictions, because I was at a 1735, I believe, 2 weeks ago. and you both were not on the show. I think it was just the meatball last week. Were you on the show last week with Andrew, with Mark?
I think I came on for 2 seconds because Mark was having trouble with the show or something, and wasn't there something like that?
Okay, is that last week? In that which case, I got a crystal ball. I got a bullseye again out here because we're at 1744 right now, and I was at 1735. So that puts me 0.09 away, listeners. That would be 2 weeks in a row. I want to make sure that is correct. I don't want to take victories that I do not earn. The meatball was feeling a little bit lower, if this is correct, 1661. And Mr. Rock Lobster, you were at a 1610. So no joy for you. I just want to make sure all this data is correct out here, listeners. I don't want to take any victories that I have not earned, but I want to make sure this is the right data. So producers, please check that. While we go ahead and look forward to this week, I'll take a tentative bullseye before we make sure that those numbers are correct. But that said, Mr. Rock Lobster, I will allow you the gift, the charity of going first, sir. What are you feeling this time next week?
Well, I'm going to go with my 1 point lower prediction, but I think we're going to be what did I say, 1610 last week? Probably, I'll say by Friday, I'm going to go 1585.
1585 for the Rock Lobster. It does seem like the crush is in. Listeners, again, we're at about a 1744 right now. Probably going to break the 17 handle. Maybe even later today. We shall see. I definitely feel like a little bit of downside is in order there as well after the breaking through the 20 handle earlier this week. I don't know if I see a 15 handle. Maybe. I mean, I wouldn't hate that. At the end of the day, my positions would like that. I'm going to say a little bit north, though. I like below where I am this week, but I'm not going to go a 15 handle. I'm going to say 1628 for me this time last week. Listen, that is your market, 1585 for the Rock Lobster and 1628 for me. All right, everybody, that is going to do it here for the old Volatility Views program today. Before we go, Mr. Rock Lobster, sir, if folks want to check out all of your good goodies, maybe get some more tidbits outside of this show, where should they go? What should they do?
Yeah, good goodies and tidbits. Go to optionpit.com. You can sign up for I do a newsletter every day with my vol musings, as we call it, the pit stop. So it's very good, actually, if you want interest in volatility, markets, stuff like that, and what's going on with option pit products. Or sign up to any one of my classes. 888-TRADE-01. Get 10% off if you heard this here show. And at Money Map Press, I do a SPY and VIX, which I still think for anybody with over 60 or 70 trades is the number one product over there right now. So by a long shot. So if you want to trade this here VIX and SPY, come on over and put your learning on.
Speaking of learning, I was correct. I did just learn that our actual updated from last week, I was at a 1765. So I was 0.19 away. Pretty darn close. And you were at an 1810, so you were feeling more upside than me, which is a rare scenario out there. So I thought those numbers seemed wrong.
Okay.
You guys joined us 2 weeks ago.
You still beat me, though. You still beat me.
I'll take it.
You know, once again, I mean, what was VIX this morning, though?
Yeah.
So here's another annoying thing.
I know. We were there.
What was I think I was a bullseye this morning. Yeah, this morning. Well, 19. I mean, we were 18. I was 1810 a while ago.
Anything from the 17.5 to 20 range was a bullseye today.
Yeah, you got a point there. So, I would not call that genius of prognostication.
Yeah, not exactly hitting the bullseye. I was close, but no cigar, listeners. That's also going to do it for our network, for all of our on-demand listeners. I want to thank you for joining us throughout the week. Hope you had a safe, a profitable trading week. Have a fun weekend. Get out, see some friends and family. We'll see you back here. We will be here on Monday. Markets are open, so we will be here on Monday for a little bit of the old OB all the way through to next Friday, another episode of Volatility Views. Of course, for all you pro folks, hang out in the chat. We'll be back in a little bit with options, oddities, and then we'll see you all here next week. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.